Breaking economic news, the American consumer remains confident in the face of financial market turbulence and worries about the world economy, maybe China in particular. Does not matter. The U.S. economy remains strong. It should be strong, 3.9% real GDP in the second quarter. That's the past. What about tomorrow, you say? Well, think again. As real consumer expenditures that make the economy go were 3.6% in the second quarter, and now, with data through August, the third quarter is running 3.3%. If you remain hopeful at all about the prospects for global growth, look no further than to the U.S. for the assurance that the world economy is not going off the rails. The U.S. is in the driver's seat. Don't confuse the downside of the commodity boom-bust cycle, copper, crude oil, iron ore, as something that will cause the next world recession. Not going to happen. The data then, this morning, consumer confidence, a conference board measure, is 103.0 in September, up from 101.3 in August. Economists, those practicing the dark and dismal art of economics, always looking for risks and downturns, economists were forecasting weaker confidence of 96.8, better than expected then. So what's the market doing? Nothing. 10-year Treasury yields stuck still at 2.08%. 103.0 in September. Where is this? How good? Well, it's basically the highest since the Great Recession. Wish we could stop calling it that. The job losses were not any worse than the recessions in the early 80s. Consumer confidence at 103.0 is the second highest since the recession ended. It was only higher in January this year, 103.8, when consumers were flush with spendable cash from the drop in gasoline prices at the pump. This is quite good news today. Bodes well for the outlook. Because where the consumer is going is where the economy is going too. This is a good report, but does it have any bearing on the monthly jobs report on Friday? Well, the confidence report from the conference board has some interesting data on how folks think the labor market is doing, classified as whether they think jobs are plentiful, not so plentiful, or hard to get. Sounds like the Three Bears story. These data are hard to understand today, but the way to view it is the labor market has improved tremendously since the early summer. 25.1% of all Americans think jobs are plentiful, up from 22.1% in August, which shows slack in the economy has all but disappeared. Indeed, many of the Fed doves think the economy has reached full employment. Net, the consumer is back, and no, we won't use the word mojo. These consumers, the 142 million people with non-farm payroll jobs in the country, the consumer is back. In the last 2 months, confidence is back above the 100 line for the index, which signals the consumer has fully recovered from the Great Recession and financial market crisis. Consumers are unfazed by the latest financial crisis, where the S&P 500 lost as much as 12.5% during the flash crisis Monday, August 24, the worst point. That low is holding, by the way. Anyway, another day, another economic statistic showing the economy is on track and that the Fed can safely raise interest rates by the end of the year. Things are better than you think.